What's up? Mortgage Rate Monday. Today is October 3rd. I think I'm going to start calling this Market Update Monday because I'm going to do a better job of explaining the rate environment and blending it with housing since I'm involved pretty heavily in both of those. But mortgage rates today, we actually had a rally today and a rally at the end of last week. So most lenders are in the mid 6.5s right now for a conventional. Even USDA and VA and like all the government loans are even in the mid sixes usually. At least today. So a good rally. It looks like, as of right now, that we may start to see things stabilize. But last time I made a prediction like that, it kind of backfired and blew up in my face. So tomorrow we could see it all crash again. But from what I've seen so far, there was some economic data, which is like some of the things I've been watching. Manufacturing slowing down a little bit. There's some employment sector slowing down a little bit. So the market's kind of rewarding that right now. Every first of the month, I go in and I look through the data in the MLS and look at, average sales price. I look at, days on market, absorption rate. I track a bunch of different data points and look through there and the markets that I work and then the overall market as a whole. Some trends that I've noticed from last month to this month is there's been a gap between active listings and pending listings, pending listings. Usually that gap's been like 2 to 1. So there'd be twice as many pendings as there is actives. So if there's 50 pendings or 50 actives, there'd be 95 to 100 pendings usually. That gap is starting to get smaller. Now, part of that's seasonal because in our area, there tends to be less homes that sell from October to January, and then it kind of ramps back up in February to September, basically. But yeah, so that gap is shrinking. Another thing that I noticed was I'll look through a lot of the sales and say, okay, how many of these sold over asking, how many sold at asking, how many sold under asking. What I've noticed is most of them were going over ask for a long time, obviously. Then you started to see it about 50-50 at asking or over asking. Now you're starting to see it about 33% a piece between under, at, and over asking. So what that tells me is both of those, especially the actives and pendings coming together, I think we're starting to find some balance in the marketplace. The houses that are selling over ask, in my opinion, they're underpricing them, trying to get multiple offers, which that's, the strategy works, obviously. The under ask, usually in most cases, they started way too high. They tried to use a high anchor strategy and they did on average 2 price drops before it sold eventually even under the last price drop. So the high anchor strategy seems to be working the least right now. And I think moving forward, what we're going to see is the market's really going to reward accurate pricing. So it's going to be, the badge of honor is no longer going to be, we sold this in 2 days at 103% of list price or whatever, because anyone can underprice a house and have it sell over asking. I think what the market's going to start to reward is the home sells in, let's say, 7 to 14 days, somewhere in the first 2 weeks, and it sells at or very close to list price. I think that's where you're going to start to really see sellers get the most value for that, and the least amount of pushback from buyers. We'll say that. But yeah, so that's really what I got this week. Like I said, I'm going to start doing more market update Mondays. Probably try to be more prepared. I've been super busy today, so I kind of threw this together. But yeah, I hope you guys enjoyed it, and I will see you next week.